Hi, this is Dave Gentry at the Harvard Club, the Red Chip Money Report. I have with me today Tom Landstreet, who is the founder of Standard Research Corporation, also an author. He is also a stock picker. He advises institutional investors on both economic and market advice. Tom, great to have you here today.
Thank you.
Tell us, you just gave a keynote address here at the Red Chip Conference today. What was the theme of your presentation?
It was really about government economic policies and their incentive effects on behavior and thus asset prices. It's kind of a hidden art and I think an underappreciated approach to investing. But my opinion is that the government is the 800-pound gorilla in any city, state, country, or industry, and that the government is really the primary definer, if you will, of incentives, positive and negative, through policies. And so we look at a variety of different policies, from fiscal policy to trade policy to monetary policy to regulatory policy, for ideas. And what we think is, like Gary Brinson once said, you know, finding the right stock, 90% is being in the right group, and this is a great framework for finding the right or wrong group, for getting a tailwind and avoiding a headwind. Knowing how government is going to create an incentive or destroy an incentive, and then using that to find stock ideas or asset prices. For an example, Bernanke doubled the monetary base, the value of the dollar goes down, and gold goes up. It's very correlated. It's just, that's an easy one. You could own gold stocks. You know, if ever you see the monetary base coming down, or you see restrictive fiscal or monetary policy, the opposite may happen.
Now, today in your presentation, you talked about oil going to $40 a barrel. Why do you believe that?
Well, it was just there in December of 08, first off, so we've been there recently. And in fact, the long-term price of oil is probably between 30 and 40. And I think that oil prices are artificially elevated by government policies that govern both the supply and the demand side of the oil market. So an example would be on the supply side, the top 5 producers in the world have significant restrictions on new supplies. Saudi Arabia is part of a cartel. Cartels, by definition, restrict supply so that they can control the price. It's not a free market. It's an unnatural occurrence, actually, and it restricts supplies. An example also is like Venezuela. You know, it's a totally unproductive society, unproductive economy, and again, you have artificial restrictions on new supplies out of a big producer because they can't drill their way through, you know, paper. Then there's Russia. Russia used to be the number 3 producer in the world. Now they're number 2 and arguably number 1. And when oil prices were at $144 a barrel in the summer of 2008, I started wondering why. Why is this? This seems so strange, because oil prices equilibrate supply and demand. When oil prices are this high, you should see demand falling and supplies rising, but you weren't seeing it. So I took a look at what was causing that, and Russia, being a top producer, had a 95% excess profits tax on anything their oil companies earned over $9 a barrel in profit. So at $144 a barrel, they were taxed at 90%, 95% over $9. Clearly, there was no incentive to go get oil. So they had an accelerating decline rate in their oil fields, which sent the alarmists through the roof. And the calls for peak oil, we're out of hydrocarbons, we've got to convert the entire world to this clean, you know, that's when they raise their head. The truth is that the amount of oil in the ground, the estimates of shut-in capacity are at all-time highs, 1.2 trillion barrels. And what we have is a situation I call political peak oil, not peak oil, political peak oil. And Russia's excess profits tax was an example, which, by the way, they lowered by 50%. So they lowered that excess profits tax to about 45% in the summer of 08 as prices shot the moon. They could no longer afford it.
Let's back up a minute.
Yes.
And I appreciate what you're saying, but there are many who believe that it's the speculators that have driven up the price of oil. And in fact, the price of a lot of commodities. Matt Taibbi in Griftopia. I don't know if you've seen that book, read that book, but he's got a couple chapters dedicated to that issue. Have you looked at that aspect of the market?
And I don't agree. If you're long oil, isn't there somebody who's selling it? Isn't there another side of that trade? Isn't there somebody effectively shorting it if they're selling it? So there's two sides to that trade. It's not just a one-way deal. Second off, speculators, like to call them investors, are providing liquidity, important liquidity in the futures and in the spot market. So I just don't buy that. And by the way, if you're going long oil, if you're speculating on oil at 140 a barrel at all-time high prices, you're counting on two things. You're counting on demand rising as far as the eye can see and supplies being restricted as far as the eye can see. And that's the only reason in God's world you would go long oil at all-time high prices.
Aren't these speculators by going long on oil? And these are, again, speculators. They're not consumers. They're not sellers of oil. They're speculators. So aren't they, by taking that oil off the market, driving up prices artificially with their buys?
No, I think the price is driven up artificially by restrictions on supplies. If you really wanted to break the back of the speculators who are long oil at these prices, allow the XL pipeline, allow ANWR drilling, and allow outer continental shelf drilling, where you'd have instantly 76 billion new barrels of oil come onto the market, and it would instantly affect the futures market. If you want to crush those guys, go do that. It'll be down 30% in a weekend, and they will be crushed. That's how you address that situation. You know.
So do you recommend our investors that short oil stocks?
It depends, I believe, on the election. The current president's antagonistic to hydrocarbons. I'm not. And so I believe that if he's reelected, you'll see a continuation of the current policies which restrict new supplies. So I would be inclined to own it. However, if he loses, I'd be inclined to short it. Romney said something the other day, which was the most interesting thing he said since he started running for president. He said, I'll build the XL pipeline if I have to dig it myself. And I liked it for several reasons. One, it showed emotion. It showed some spirit. And second off, it showed me the future if he wins, and that means lower oil prices. And so I would put that trade on however I'd do it. If falling oil prices help the consumer of Buffalo Wild Wings chicken wings, I'd go long because, of course, you know, it's a big part of our spend is gas. I would short oil, absolutely, and anything related to it, and I'd go long those companies that are penalized by high oil prices, if you will. So I think it's binary.
Okay, okay. You wrote a book, authored a book called Connecting the Dots.
Yeah, it's actually a running commentary. It's my research product. I write papers on topics for everything addressing all these economic policies, trying to connect the dots between policies and prices so that investors can find a group, a theme to invest in or avoid.
Well, okay, what areas do you like right now? Where should we be long?
Gaming stocks are very attractive to me. It's counterintuitive. Obviously, we have, the consumer's not in great shape, so that's the negative side of it. But because states are really up a creek in regard to their fiscal situation, and they really need new revenues, and they don't have the political environment where they can raise taxes, they are allowing gaming everywhere. So the states that are doing this suddenly are, for instance, Connecticut, New Hampshire, Massachusetts, Rhode Island, Maryland, and even New York, and Florida, and Idaho. And so gaming deregulation in the United States has come in two waves, essentially. There was Vegas, and then there was Atlantic City. And then there were all the Indian reservations and the riverboat gambling. That was all allowed in the early 1990s. So what you saw was, after that wave of deregulation, what I call personal consumption expenditures, that is total amount of money spent on gaming, shot up. And so some may worry, yeah, but that's going to hurt Vegas. Maybe, but it grows the pie. From my analysis, it doesn't divide the pie. So if you've got a whole new wave of gaming deregulation, and you're going to have casinos all over the Northeast, it basically will take that person that would ordinarily go to Vegas to game and keeps them home. And it's a competition now.
What are some of these stocks? Can you give us some symbols?
Well, you know, there's the big casino operators. There's Sands and Wynn and Penn Gaming and so forth. Some of them are saddled with a significant amount of debt. But then there's other widget manufacturers that are going to benefit. Shuffle Master, if you've ever sat at a card table recently, you know that the dealer is getting the cards from a machine and then putting them back in. Shuffle Master has made some acquisitions, and they're all over a number of different areas in gaming. It's a unit growth story, remember. It's storefronts growing up. It's really, who else? Bally. There'll be a lot more slot machines. There also is going to be IGT. And by the way, I'm not suggesting these are the stocks you buy, but these are the stocks you look at. There are a number of 2 states now that have allowed online gaming, and I think there's going to be more to come of online gaming. So the big players in the online gaming space are worth a look as well. So it's an area where a lot of people aren't looking,
right?
And it has this theme of deregulation. That's
right.
one.
Okay. Now, Tom, do you do much in small caps? In market caps under $1 billion?
Yeah, certainly do. You know, Shufflemaster would be one under $1 billion.
Mm-hmm.
And my whole history's been in the smaller cap space. Mm-hmm. The whole reason I'm excited about gaming is stuff that's going on at the state level. A number of states have turned their fiscal situation around significantly and without much fanfare. Ohio being an example I shared in my speech today. Ohio, former Rust Belt state, I say former because it's perking up, the growth rate's perking up significantly, has cut their deficit from $5 billion to $3 billion. So a 40% cut in their deficit and gotten 3 ratings upgrades from Moody's and Fitch and S&P. And they've also cut tax rates on earners by 21%, and at the end of this year, it'll be 25% tax cuts. And they also have cut a number of onerous special taxes on producers and manufacturers, a so-called roof tax, where if you add a square footage to your manufacturing facility, there was a targeted tax to penalize you just for that. So clearly nobody was interested in expanding. The play for the investor is outsourcing. They're outsourcing everything that everything that doesn't have a political constituency to argue against it. So they would be roads and bridges and toll roads and parking lots and parking services, psych hospitals and developmentally disabled schools. Those areas that are, I call them dirty little social services and inanimate objects where they're in a protected class of, for instance, unions that are fighting it. And so those are the first to be outsourced. So you've got 2 publicly traded prison companies, GEO and Corrections Corp. My guess is, if this current path continues, there'll be a significant increase in outsourcing of prisoners. And sometimes when they outsource one prison facility, it adds a dime in earnings to these companies. So they're exciting to look at. And then there's schools. I am actually, if Scott Walker wins in Wisconsin, and if the politics end up going the way they may, you might see a real wave of deregulation at the state level with a lot of investor ramifications. The prisons, the social services, Medicaid services, and there's some publicly traded companies. Providence Service Corp, PRSC, is a little amalgamation of these social services, if you will. I'm sure they will benefit. And then I predict we're going to see, well, there's 5,000 charter schools that have been chartered or being built currently. And I wouldn't be surprised to see some publicly traded high growth small cap stocks in the education space, secondary education space.
Tom, your website, tell our viewers your website. How can they learn more about what you do and how you do it?
Website's thomaslandstreet.com. I'm converting that now to Connecting the Dots. I blog and I post pieces of my papers. I put out papers on free trade, monetary policy, fiscal policy. I've talked about pro-growth austerity at the state level. So I look at the theme, these states that are doing this, and then I come out with a gambling paper and I come out with an outsourcing paper. I've got one coming out on the oil market where I'm describing this stasis, if you will, political peak oil, and what might happen to oil prices and other investments if the election goes one way or the other, and that'll be a subsequent paper. And I put a lot of that stuff in shorter format on my website, thomaslandstreet.com. Which I will, again, be converting to Connecting the Dots here.
Now, you have an interesting background, so I want to spend a few minutes on your background. You were a comedian, you were a rock musician, you still play in a band. You spent some time at Oxford University. Tell us a little more about your background.
You know, it's a completely unorthodox background and one that I've stumbled into a great life. I was intent on being in the arts for many years. I was in theater in high school and college, and I wasn't too bad at it. I moved to New York City and actually did stand-up comedy at Catch a Rising Star. I started off as a doorman, thinking I might be able to be a comedian. I wasn't sure. So they gave me one of these little mics, and as I was a doorman, and when people would line up for the show, I had this mic, and I'd say, well, the shows are at these times, and here's the coat check, and the bar is this, and I would give them the little format, but I started weaving jokes. And the guy, the rainmaker, the kingmaker in comedy, who basically governed who the Catch a Rising Star comedians were, one day tapped me on the shoulder and said, "You're a comedian, aren't you?" And I lied and said yes. And he said, "How would you like an audition?" And I said, "Well, I would love one." So he gave me one in 2 weeks. Of course, I panicked and I ran home and I said, "Oh no, now I've got to be funny." So I went home and wrote a script, and it was kind of like a Southern boy hits the city type thing. I told one of my jokes here about when it rains in New York, the city makes its own gravy, and people chuckle who know that. And that was one of my jokes that really got a laugh, and it was.
How did that joke go?
Today?
Yeah.
Very well, because I'd set it up that I'd stepped in this puddle when I was rushing over here. I was late, and I was like, New York's the only state that, when it rains, the city makes its own gravy. And you can see people wince with pain and chuckle because they know the story. So that was kind of stuff I used. I eventually worked my way into advertising copywriting, and then eventually started editing research reports. My father owned a broker-dealer, and they used to write research on banks, and I would read those and found them to be fabulous, and the money was so much better on Wall Street. So I took what talents I had, which are, I didn't know how to build an income statement per se, but I'm very perceptive in regard to people, and I was a good editor and decent writer and communicator, so I eventually became an institutional equity salesman. By the way, it took me 2 years to find a job. I thought nobody was going to hire me.
It was Robinson Humphrey?
Robinson. Originally Interstate Johnson Lane, now defunct. But, I banged on that door, and it was like, English major, what can you do in this world? And I was convinced I could do a lot in that world. But nobody else was convinced. But I didn't let up. And so I finally got that opportunity, and within 2 years I was the top salesman at Robinson Humphrey out of 25.
How about that?
Yeah, so it's
an English literature major.
Right. Yeah.
Any other sectors you like before we sign off here today, Tom?
Well, I'm an optimist, so I think a lot depends on this election. So I'm really looking at things like, I'm saying what ifs. What if President Obama survives? What happens to oil policy and oil prices? And I would say they're probably not going down. I would say food prices aren't going down either. And I would say the value of the dollar is going down. And I would say that he's going to be choking Bernanke to QE3 and 4 because that's the only policy he thinks can move growth, because his other policies are restrictive to growth, including the Obamacare, which is raising the price of hiring, which is leading to 8.2% unemployment, in my opinion. So you've got a wet blanket over the economy right now, and it's all policy driven. So if the wet blanket stays, you can develop a framework for one sort of trade. If they let up a little bit of that wet blanket and oxygen touches the fire, we're going to see flames in a number of sectors. Oil prices down, food prices down, because that 10% ethanol requirement would be removed. You might buy Tyson Foods, or you might buy Pilgrim's Pride, or you might buy Buffalo Wild Wings because the cost of commodity prices are going to be falling. And then there's the outsourcing trend. If you see Scott Walker win, get ready. It's going to be very exciting. We'll have a new sector of our economy, government outsourcing. As far as in Asia, I'm very excited about the free trade agreements that are going on and the liberalization that's going on in China. They continue to liberalize. Now, they are micromanagers, as you know, so it's rife with challenges. But Philippines and Indonesia, Malaysia, Singapore, they are on fire, and for a reason. They're cutting tax rates, they're freeing trade, and they are reducing restrictions, and they're liberalizing their capital markets. So I'm very pro-Asia, in that way.
Well, we're very focused in Asia, and in fact, we have 5 Chinese companies here today. I don't know if you had a chance to look at them, but I appreciate your perspective. Again, Tom Landstreet, writer, philosopher, economist, thinker. Great being with you. Thank you so much for presenting the keynote today at the RedChip Conference.
Thanks. It's been it was a great audience. There's a lot of interesting response.
Right.
Favorable.
Good. Yeah, it's great.
You got a good company. Thank you.
Tom.
This report is not a recommendation or solicitation to purchase or sell any security, nor does it constitute investment advice. Visit RedChip.com for full financial disclosures on RedChip clients.